Hey everyone, welcome back to Corporate Decoder, the place where we decode the confusing world of finance. And let me tell you, this latest filing from Capital Clean Energy Carriers Corp is quite the journey, a real maritime adventure in numbers. First off, buckle up, because this company is making some big moves, shifting from carrying containers to focusing on LNG, which is basically natural gas for ships, and other cleaner energy stuff. They've been selling off their older container ships and buying new, fancy LNG carriers. It is like trading in an old pickup truck for a cutting-edge electric semi-truck. They've offloaded 13 container ships since late 2023. Think of it as cleaning out the garage to make room for something new and exciting. They're calling these sales discontinued operations, which basically means they're separating the past from their future plans. And get this, they even sold the Manviv Manzanillo Express in October 2025. It is like they're determined to clear the decks completely. Now, let's dive into the real meat of this report, the financial tables. This is where we see how all these big strategic shifts are actually playing out. Their total revenue jumped significantly from about $227 million in 2023 to a whopping $355 million in 2024. That is a huge leap, almost a 56% increase. This is directly because they've got more of those high-earning LNG ships on the water. It's like adding more profitable routes to their shipping network. Their vessel operating expenses, especially those paid to related companies, have also gone up. This makes sense because they have more ships to manage, and managing these advanced LNG carriers likely costs more. It's an investment in their new direction. Here is a big one to watch: interest expense. It shot up from around $88 million in 2023 to over $132 million in 2024. That is a roughly 51% increase. Why? Because they've taken on a lot more debt to buy all those new LNG ships. More debt means more interest payments, which eats into profits. It's the classic trade. Off when you are expanding rapidly. Despite that jump in interest costs, their net income from continuing operations is way up, from about $8 million in 2023 to a solid $55 million in 2024. This shows that the revenue from their new LNG business is strong enough to cover the increased costs and still make a good profit. They're not just selling old stuff, they're building a more profitable future. And look at the discontinued operations, that is the container ships they sold. They actually made a massive profit of about $138 million from selling those ships in 2024. This really boosted their overall numbers for the year, showing they got good prices for their old assets. Their total assets have grown by almost $1 billion, from about $3.1 billion to $4.1 billion. This is a clear sign of their expansion. They're investing heavily in new vessels. Their short-term debt has also increased, which is expected when you are acquiring big assets like ships. They are carrying more short-term obligations as part of their ongoing operations. On the flip side, their total shareholders' equity, which represents the owner's stake in the company, has grown to over $1.3 billion. This increase is good news, as it means the company's net worth is going up. Now, let's talk about their strategy. They're clearly betting big on LNG and the energy transition. This is a smart move because there is a growing global demand for cleaner energy transportation. However, this strategy also comes with risks. They're heavily reliant on a few major charterers, meaning if one of them backs out, it could hurt them big time. It is also worth noting that the Marinakis family, through various entities, has a significant stake in the company, owning almost 60% of the shares. This means they have a lot of influence over the company's direction. A big risk they highlight is their dependence on debt. They have a lot of long-term debt, and if market conditions worsen or interest rates go up, it could make it tough to meet their loan payments. It is like having a very large mortgage on a fleet of expensive ships. On a positive note, they repeatedly state that they are not aware of any major legal issues or contingent liabilities that need to be reported. That's always good to see. Overall, Capital Clean Energy Carriers Corp is in a major transformation phase. They're shedding their old container business and aggressively investing in the growing LNG and energy transition shipping market. The revenue numbers look very promising from this new direction, but the increased debt and reliance on few big customers are definitely points to keep an eye on. They're making a bold bet. And if the demand for LNG transport continues to rise, they could be in for a very profitable future. What is your take on this company's big shift? Do you think they're sailing towards success or facing stormy seas ahead? Drop your thoughts in the comments below. If you found this deep dive helpful, please hit that like button, subscribe for more corporate breakdowns, and join our Discord community linked in the description for more exclusive content and discussions. Thanks for watching, and see you next time.